talk about then the beauty and personal care space. Back in 2017, My Glam, as it was known, was a D2C beauty brand. Today, it's been given a complete beauty makeover, if you will. It's the Good Glamm Group. It's one of India's first beauty commerce startups to actually turn into a unicorn. And joining me right now is Darpan Sanghvi, who's the group founder and CEO at the Good Glamm Group. And it definitely has been a makeover of sorts, Darpan, from the first time that we interacted years ago. So let's take forward that conversation by starting off and talking about the latest news, why Good Glamm Group is in the spotlight. 2 years after you acquired about 75% stake in D2C mother and baby care brand, the POPxo, I understand now that you've increased your stake to 90%. Give us the details.
Hi, Avanne. Good to be back with you. When we did the acquisition in 2021, where we bought 75% of POPxo, at that point of time, the plan always was that in 2023, we will take our stake up to 90%. And in 2024, we will take it all the way to 100%. There was a path that was charted out along with the founders, Mohit and Malika, where they supported us in this transition period. We've officially finished this consolidation, taken it up to 90%. Mohit and Malika have stepped down from active management and will continue to remain on the board of POPxo, helping us and guiding us build the brand over the next 1 year till the time we take it over 100%.
Okay, great. Now let's just understand a little bit about the company's strategy, because you guys have been on a complete acquisition spree in a very short period of time. The company has raised a solid sum of money. You guys have been on an acquisition and you've consolidated the business. So there's lots to really talk about. Let's just understand first up, what has been the outlook in terms of the three verticals that the company currently runs? Because I just want to understand how exactly that works. There's a Good Media Co, Good Creator Co as well.
Absolutely. So as you said, we had a lot of M&A that happened, and that happened in 2021, where we acquired 10 companies. They were spread across media businesses, digital content companies, influencer companies, which are creator companies, and brands, beauty and personal care brands like the POPxo. 2022, last year, was about consolidating all of this frantic M&A that happened in 2021. As we did the consolidation, we clearly realized, Avanne, that a media and a creator and a brands business are three very unique individual businesses that have different DNAs. And which is why we created three verticals within the company: Good Media Co, where all our digital content assets sit; Good Creator Co, which is where all our influencer platforms and influencer companies sit; and Good Brands Co, which is where all our beauty and personal care brands sit. All three of these have individual P&Ls. All three have to turn profitable individually without receiving any subsidy from the other verticals, while at the same time, Good Media and Good Creator become the internal moat and flywheel to scale good brands. So it was with that thought process that we created these three divisions, and we got in three CEOs. Sukhleen, who leads Good Brands Co. She comes in from Reckitt and Unilever and L'Oreal, 19 years of experience. Priyanka, my co-founder of the Good Glamm Group, who leads Good Media Co. She was the founder of POPxo. And Sachin Bhatia, who was the founder of Bulbul, which we acquired, leading Good Creator Co. For us. So that's how the three verticals came about to be last year.
Yep, since you brought up numbers, I'm just going to take that forward, because I know you said you plan to be profitable in all of the verticals, but I understand that the company reported a loss of about 270 odd crores in the financial year ending March 2022, which ballooned quite significantly from the 43 crore loss that we saw in the previous year. What is the outlook on curtailing the staggering total expenses, which I understand which were higher by about 5.6 times in FY22 in order to make these verticals profitable, and what's the timeline?
So timeline to get profitable is this year, FY24. We are confident that by the first half, between September and December, we will be profitable at an EBITDA level for that quarter. We will still be unprofitable for AMJ and July, August, September. But O&D, October, November, December, is where we intend to hit profitability and then continue the profitability path from there. Every brand and every company has a life cycle. Last year, we made a lot of investments in creating a very strong team, very strong infrastructure. We brought in SAP. We brought in very senior leaders from great companies to help us scale. all our expenses, Avan, all our fixed costs last year from Jan 22 to March 23 have actually remained flat, while revenues have grown 2.5x. In that same period, the monthly run rate has grown 2.5x from Jan to March for us. So what that has done is gotten us much more closer to EBITDA profitability. We are CM2 positive, which is our channels, our contribution margin positive after marketing costs. And all we need to do now is continue to hit our scale targets over the next couple of quarters. Fixed costs are constant, and that CM2 then will translate into a positive EBITDA as well. So we're very clear as a company. Every team member is focused on ensuring that profitability is delivered. So this year, FY24, while we'll see about 110% growth, so we'll grow about 2.1x times. It will be done with us breaking even and being profitable as a company.
Okay, good to know that timeline. And, there's a lot of marquee investors, Darpan, on board, the likes of Warburg Pincus, Process Ventures, etc. Are you looking at a further fundraise round? And how much is it that you've raised so far?
So we're not looking to raise money. We might raise money early next year, let's see, or mid of next year. No plans to raise any capital thus far. We're blessed to have the cap table that we have. It's a great mix of marquee VCs like Bessemer and Axel, private equity like Warburg and Naspers, and amazing strategics like L'Occitane and Amazon, and some great Indian funds as well, like Ascent Capital, the Mankaker family office. So they all bring in a wealth of knowledge and experience to us. And we know that whenever we want to do a round, there are already a lot of strong internal investors waiting to write that next check. So organically, we have no plans to raise money. However, if a very exciting M&A opportunity comes up later this year, then we might think of raising capital. But at this point of time, we have zero plans to raise capital. I think we have raised approximately about 180 to $200 million of equity thus far in the Good Glamm Group.
Yeah, I know you're always on the prowl for these acquisitions. And am I wrong to say that there have been 11 acquisitions since the year 2021? What else? Is there something that you're close to, tying up? Is there anyone that you're presently in talks with? And which vertical would it be in?
So our acquisitions followed a very strategic approach. I had a jigsaw puzzle, and we said each of these M&As that we did is going to help cut short my learning curve or give me a head start in which piece of that puzzle. Our acquisition strategy is not an acquisition strategy just to roll up and keep adding revenues, right? Every one of those media creator brand acquisitions were fulfilling a purpose. If you ask me, I think the one M&A that I still need to pull off is that of a strong offline brand, something that would have presence in 500,000 to 1 million stores, through which all our DTC personal care brands can be pushed out and distributed. We don't have a target right now in our sights, but hopefully something comes up in this year, and we keep our fingers crossed for the same. Other than M&A, you will hear a lot of exciting developments from us. We're going to be entering the men's category, and you'll see some great news on the same soon. And you're going to see some great news on all the work we've been doing in international, which we've been keeping under wraps for the last 12 months.
What's next? Is it going to be plans for an IPO? Is that a long way to go? Is that something that's in the near term?
I think IPO, look, unless I have to be very predictable as a company before I can list. Predictability in terms of growth, predictability in terms of profitability, and I have to be of a certain scale. I think that right time for us, I want to make sure, I was saying we'll get profitable OND quarter this year. Want to have at least 4 to 6 quarters of profitability behind us, where not only is your top line growing well, but also your EBITDA continues to grow every quarter before we go to the market. So I would say anytime between end 24 to mid 25, hopefully could be a timeline for us to list if we can achieve all the targets we've set ourselves to.
So it's this sort of, house of brand strategy that the company has adopted, which is, if I'm not mistaken, pretty similar as well to what we've seen, for example, something like a Mensa, right? So how does this strategy really work for the company, and walk us through what are the benefits in the long haul?
So for us, we're very clear. We're trying to build a digital FMCG conglomerate. You look at any FMCG conglomerate out there, you would have multiple brands. Why do you need multiple brands? Why can't I build a 5,000, 10,000 crore revenue business with just one brand. You cannot, because India doesn't have that kind of depth in a single category, single brand. So you need multiple brands to be able to build a meaningful billion-dollar revenue business. Now, the category that we play in is beauty personal care, because that's the category that we understand really well. That's where we started My Glamm with. The other brands that we got in, now, the other thing about beauty personal care, it's so brand driven that you cannot translate the equity of My Glamm, which is in makeup, into sanitary hygiene. You just cannot. You need another brand for that, or for hair fall, right? Or for acne. And that's how we went and got these other brands in the portfolio, where we said, hey, this is a $2 billion TAM in parenting. Let's go and get, Mom's Co and Baby Chakra and tackle that market. There is a $1 billion TAM in hygiene, sanitary hygiene. Let's go get Sirona and tackle that. And that's how we built this brand. We've not acquired any brands in the last 12 months, 15 months, right? Because we're busy building these brands and growing them further for us. Our goal is all of them should become market leaders, just the way My Glamm is now becoming a market leader in the makeup segment in India. Make all the other brands a market leader in their own category. And the synergy that flows for this strategy is my DTC customer. My My Glamm customers that I acquired, we have 12 million transacted customers on my direct-to-consumer platform through all the content creator traffic that comes in, and then they transact into our brands. Now they are buying brand 2 and brand 3 and brand 4, which is why all the brands that we acquired have grown between 2 to 4x, depending upon the brand, since the time we bought them, driven primarily by the cross-selling of those brands and products to my existing database of DTC customers. I think that's the number one synergy. And then, of course, you have synergies on the cost side, supply chain, and other places too. Our offline presence have been shop-in-shops in other beauty retailers. Today, we have about 2,000 beauty shop-in-shops where we have our retail associates doing the selling. In FY24, we're taking that number up to 3,500 for us. The other interesting thing that we did last year was wherever there was a My Glamm BA retail store, we added the acquired personal care brands there, and we saw an overall uplift of 25 to 30% in that counter sales, which really drove, it really made the CM2 really, really attractive for that particular counter. So that's one piece. I think the other piece is personal care brands can really go into, pharmacies, grocery stores, the Kirana stores, and that's where we need that large distribution that can be 500,000 to 1 million point of sales. There today, organically, we're only in 50,000 point of sales. So I think that's one big opportunity for us in the next couple of years to unlock as well.
All right. So I just want to understand, for simplicity's sake, how you would differentiate the Good Media Co., which has the likes of Baby Chakra, Miss Malini, Scoop Whoop, etc. as the recent acquisitions, versus the Good Creator Co., because that is something that is purely for influencers, is it, to target that market?
Absolutely. So the way to think about it is Good Creator Co. is an app. It's like, one single platform for influencers to come in here. They get data analytics about what's working, what kind of content they should create. They get campaigns to do work with brands. The content they create gets amplified on Good Media. So Good Media is generating over 4 billion impressions on social media, on Facebook, Instagram, etc. Good Creator Co. are creators who are creating the content that gets fueled through the Good Media Co. Reach. And in all of that, we're able to insert brands from good brands into the content that good creators create, and that gets amplified through Good Media. And then those impressions that get created, part of them start becoming branded impressions for our brands. So that's how the businesses are separate. Good Media has content that goes out and creates large social media reach. Good Creator Co. is where we have today have 1 million influencers, over 1 million influencers on it, who come in, interact with each other, create content, do work for brands, make money, get analytics about themselves and what's working in the market. And all of that happens on the Good Creator Co. app.
Got it. Okay, and you're also looking to really maximize potential for revenue for beauty and personal care by expanding to international markets. Tell us more about that. For My Glamm and the Moms Co., I believe it's the Middle East and Southeast Asian markets.
That's right. So, last year what we did was we invested in creating a distribution team in the Middle East, where we set up a great team led by some very senior folks. And we started to bring in our brands one by one. So the first brand we took in was Sirona. Sirona today is at Carrefour. If the next time you're in Dubai, do stop by at any of the Carrefours. I'm sure you've seen the Carrefour at the Mall of Emirates. Go into the Carrefour, you'll see Sirona, you'll see the Momsco. In a few months, you'll also see My Glamm and our other brands going out as well. We've just after the UAE, we have just started selling in Saudi Arabia, and Qatar and Bahrain are next. So it's a centralized distribution platform. All the brands that we have get pushed out through this. What will come after that is also Southeast Asia and some more exciting things, which hopefully we'll be able to unveil to you guys in the next 3 months.
Okay, and finally, I know you said that you want each of your verticals independently to become profitable, but what's the goal over the next, say, 2 to 3 years in terms of your revenue run rate, where you see the Good Glamm Group, what kind of a company that it's going to be, given that you do want to be a digital FMCG conglomerate, what's the game plan?
So I think, by the time we look, a traditional FMCG company is at an EBITDA of about 20%. If we are direct to consumer, where if 50% of your revenue is going to come from your own website and app, there's no reason why our EBITDA cannot be between 25 and 30%. So that's the longer term goal, right? Next year we get to 5%, 25 by the time we get to FY25, we get to a 10%, and then from there on 15, 20, and then 25 to 30. So our longer term goal is traditional FMCG guys at 20%, can we be at 25 to 30%? I set the number earlier as well, where in the next 3 years, can this be $1 billion revenue company? And that's when it becomes a very, very meaningful IPO.
Time to slip into a very quick break, and as we do, take a look at the tweet of the day. See you on the other side.